Well, it's positive now for the market. The Nifty is in the green. The Nifty is at 25,065. The Midcap had a little bit of a dip, the Midcap index, but now it's back with a gain of close to about 0.5%. Hello and welcome to Trading Hour. I'm Reema Tendulkar and with me is Sonal Bhutra. Hi, Sonal.
Hey, Reema. And you know, it's been a little choppy so far. We did see those high levels, then it did fall into the red. And now again, back in the green is what the trend is suggesting right now. But you have to say it's a very, very stock-specific market right now. The mid-caps, they're outperforming yet again. And that is one theme that continues to be the case in last couple of trading sessions as well. So at the day's high right now, it's almost a 300-point gain on the mid-cap index as we speak. The advance decline ratio, those lines should also come up for you on the screen, and that also is in favor of the advances for around 2,000 stocks on the advancing side on the BSE. We have around 1,500 on the declining side, but overall, it's looking like a decent day so far. We'll have to see whether that continues or not. The big crude oil price fall is something that is positive for the macros overall. But we do have a lot of stocks which are in focus. We do have a lot of brokerage notes that we are going to be talking about as well because there have been updates on stocks, there have been updates on news flow, but you know, it doesn't feel like earnings season is over. We still keep getting so much.
Well, there's just so many companies, right, that have gotten listed, you know, with the slew of IPOs. You know, we on Editors Roundtable on Friday, we had Atul Mehra, Motilal Oswal, and he said so far this year, the number of IPOs in India have hit $10 billion. Okay, that's the size, which is half of that of what US has seen. And US is 10x the market of India, right? Just to show you that the number of companies which have headed to the Lal Street and debuted on the Lal Streets, of course, we're talking to so many of them, but, you know, FMCG continues to see buying. So the defensive tilt in terms of FMCG, pharma, the IT index is also back in the green. So in terms of sectoral gainers, it's FMCG which tops the list. And you've got names like Asian Paints, HUL, ITC, Britannia. All these stocks are up anywhere between 1 to 2%. Asian Paints, of course, leads the charge. Autos are on the back foot today. The Nifty Auto Index is down about 0.7 of a percentage point, but it's trimmed its losses. At one point of time, the Nifty Auto Index was down more than 1%, and the little bit of a recovery is courtesy Bajaj Auto. Now, Bajaj Auto is racing away to fresh all-time high levels. It's now a 4% gain on Bajaj Auto. Eicher, Maruti Suzuki too are now back in the green. So it's only Tata Motors which reels under pressure, and then you've got Samvardhan, Motherson, and some of these auto ancillaries we can trade. We'll discuss all that in greater details. But first, let's talk about Jefferies, because they've come out with some changes for their India model portfolio. Hormus is here to detail those for us. Hormus.
There's a very interesting note that Jefferies has put out, right? They have mentioned very categorically that the number of underperform recommendations in their note has doubled compared to the last time. It now has 10 stocks with an underperform rating, and that is in line with their near-term cautious view on the markets. Now, based on that, the brokerage is overweight on sectors like finance, on financials, consumer staples. That it's neutral on sectors like healthcare and real estate, and then it is also underweight on sectors like IT, energy, consumer discretionaries is where it is underweight, and on materials as well. So based on this, we have listed some of the new stocks that buy recommendations and underperform ratings that find a way in their model portfolio. ITC is one of them, where it is expecting an acceleration in its FMCG revenue for the current financial year, and it is expecting its EPS to grow at a 10% CAGR, which according to them is lower than peers, but still reasonable in the, as per their standards, and the valuations for ITC are in line with their pre-COVID valuations as well. Now, the other one that finds a mention here is Zydus Life, where they're saying that the pipeline, the US market pipeline that the company has, is the best among the peers, and the street is not factoring in enough the potential that this pipeline has, which is what drives their overweight stance on Zydus Life. And the last one being Interglobe Aviation, where it says that it is positioning itself as a global player with limited competition, and it is expecting Indigo's EBITDA to grow at an 11% CAGR over FY24 to 27, and it is valuing the stock at 10 times September 2026 consolidated EBITDA. On the flip side, some of the high-flying names of recent times are driving the underperform recommendations on Jefferies. Dixon is one of them. The stock has rallied almost 150% in the last 1 year. That's what keeps them underweight, and also because of the fact that as a result of this move, it is trading at a very steep premium compared to its global peers, and any weakness in the domestic consumer demand will warrant some caution on stocks like Dixon. Tata Power is another one where it is underweight, where it says that they remain concerned on the execution delays and the renewable energy capacity expansion that the company has done, or the Odisha distribution business is yet to show any meaningful upside potential for the company, and instead they prefer NTPC and JSW Energy as means to play India's power sector theme. And lastly, IEX, where Jefferies is again underweight, and it says that it is facing this near-term headwind of competing exchange and this threat of market coupling that still continues to loom large, and if that happens, it will accelerate IEX's market share declines, and as a result of which it has an underperform rating with a potential downside of as much as 100 rupees from current levels is what keeps Jefferies underweight on stocks like IEX. Back to you.
All right, some interesting names there. Thank you so much, Varmas, for getting us up to speed with what Jefferies is saying about some of their top picks and some of the top sells as well. Let's move on now. BMW has lowered its 2024 profit margin outlook, citing issues in the braking system and sluggish demand in its key Chinese market. How will this impact the Indian auto suppliers? Vinny is joining us with the details. Vinny.
Good morning. And, talking about BMW, overnight what happened was they revised the profit margin outlook for 2024, especially for the automotive segment. They've given an EBIT margin guidance of 6 to 7% versus the previous guidance of 8 to 10%. Similarly, for the motorcycle segment as well, the EBIT margin forecast has been cut to the range of 6 to 7% from previously 8 to 9%. And this is mainly two major concerns and issues that they have highlighted that would impact the company even in terms of the performance for the second half of the year. The key reason one is a downward revision mainly because of the sluggish demand that is in the key market of China. And other than that, what also is impacting them is there is a bit of a delay in terms of delivery from a Continental, which is one of the top suppliers for them in terms of the braking systems. So these are the two major issues because of which they have cut their EBIT margin guidance. Now, how does this imply and impact overall the suppliers that are there in India for BMW? So we have 36 Indian suppliers who are supplying some of these auto parts to BMW. Among them, Samil is one of the top ones. They generate around 5% revenue from BMW, and consolidated revenue as well as BMW's overall China revenue for Samil is at around 11%. So significant impact that we are seeing on Samil. That is why today the stock is also down in trade. Now, overall, the company also said that they are expecting a bit of an operational impact following the BMW's guidance cut that we're seeing. So yes, we could see an impact of that. Rico Auto are some of the other suppliers that delivers around 11% of its revenue to BMW. Suprajit Engineering delivers around 4% of its total revenue to BMW. The supplies that come into BMW is around 4%, and other suppliers like Seat, Good Luck, Minda Corp, Apollo Tyres are among the other names. Now, looking at a peer like in the luxury market like JLR, not much of an impact because they've already factored in the weakness that that BMW has highlighted in terms of China market as well as the EU market. So yes, that's factored into the guidance of 3.5% year-on-year revenue growth that they're expecting in FY25. But for JLR, what is the impact that one could expect is because of UBS's note where they're giving a sell rating. Target price is also at 825 rupees per share. Brokerage is highlighting that how, the recent launches have performed well, but now seems like the discounter is going to move on higher, and that is going to be impacting as a downside risk in terms of margins, both for JLR as well as Tata Motors, India passenger vehicle segment and the EV segment. So keeping an eye out on Tata Motors, that also clearly is under pressure today.
Thank you very much for that. Tata Motors extending its loss now down 5.5%. Get into a break. On the other side, we'll put the spotlight on crude oil and gold in our special segment, Commodity Corner. Welcome back. Let's turn our attention now to the commodity space. Manisha is joining in because even as crude prices decline, gold continues to sparkle and soar to new highs. Manisha.
Well, it absolutely does, Reema. Yes, the all-time high that we've seen in case of gold prices was on 20th of August at $25.30 an ounce. We're trading around $25.20, so just about $10 away from those all-time highs. And the gold has been bought in the recent many months because of geopolitical tensions. We also have seen the de-dollarization theme play out, and the global central bank buying has been on the stronger side. And also now, when you look at the CME Fed Tool Watch, it tells you that there is now a 67% probability of a 25 basis point rate cut. cut, and there is some 35% probability of a 50 basis point rate cut as well. Well, that is something that the street will keep an eye on. But ahead of that is going to be the inflation data that comes in from US today. The CPI numbers come in today, and the producer price index comes in tomorrow. So this is what will tell you on where the dollar will move and the gold buying can happen. Going forward, as we see it all heating up because of the US presidential elections in the month of November, well, that uncertainty also is leading to gold buying. If you look at the spot price buying, whether it has been in Europe or US, has been on the higher side. Also, given the fact that India is now looking at festivals and the wedding season in the next 2 months, the physical buying here also seems to be picking up.
Okay, thank you so much, Manisha. You're as yellow as the yellow metal today, actually. Looking great there. Thank you so much for joining us with all those details. But, you know, the other big mover in the commodity space is crude oil. We've been talking about how they have come off. Brent has closed below the $70 a barrel mark. Hormaz is joining in with more details on this. Hormaz.
Well, gold may be shining yellow, but oil is facing some blues in the recent past, as has been the correction as well. Almost at the same time last year, we were talking of oil prices hitting around $100 a barrel, but now we are talking of a 30% correction from those levels of around $97 or $98 is where Brent crude currently trades, 30% lower from those levels. Now, this is the weakest quarter. It's down. The Brent crude prices are down almost 20% this quarter, which makes it the weakest since the third quarter of 2022. And it's been this kind of a year, right? The first quarter, the oil prices were higher. Second quarter, they were flat. Now, this quarter, they are down almost 20%. Now, what is causing this? Now, there are demand concerns, of course, and that is the biggest driver of this price fall, particularly the economic concerns in US and China, both being the largest consumers of oil, and that is causing this. And of course, there is an uncertainty over what will OPEC Plus do. Now, in view of these oil price falls, the OPEC Plus had postponed their output hike, which was scheduled to begin from October by 2 months. But then this was not a decisive hike, as has been the case in the previous hikes that they have made. This was not a decisive delay. But what OPEC has done is that they still have plans to increase output by almost 2 million barrels per day by next year. And now, what can support prices? Well, there is hurricane season going on in the US, which might end up leading to a closure of some of the rigs, and any further output cuts, if at all OPEC does announce some, that may lead to some cushion for the prices. What JP Morgan believes, it expects Brent to average around $75 a barrel in 2025, but it says that the prices by the end of that year may dip to the low 60s, is what they are saying. Goldman Sachs expects Brent to average around $77 next quarter, but the risks to their $70 to $85 range is what they have for crude is still skewed towards the downside. And Citi believes that oil is on track to hit their $70 target by the end of 2024. And OPEC is caught now in a vicious circle of trying to sacrifice some market share in order to defend prices. So all in all, it's a very slippery slope ahead for oil prices.
Thank you very much for that. Free fall is what one of the guests also indicated when it came to crude prices. Get into a break. We'll come back and discuss market technicals with Mitesh Thakkar.
Welcome back. You're still tuned into Trading Hour. It's time to talk about market fundamentals. Rakshit Ranjan from Marcellus Investment Managers is joining us now to discuss just that. Rakshit, good morning. Thank you so much for joining in. And we're talking on a day when we're seeing gold prices surge, but crude prices come off from those higher levels at a 3-year low as well. These structural shifts that we are seeing right now, how are you looking at the markets at current juncture? We got the mutual fund data as well yesterday. Equity flows continue. Large caps have seen a big flow this time around. How do you see markets shift the pattern now?
Yeah, so I mean, the way we look at broader economy to begin with is there's moderation in consumption expenditure, quite across the board from small ticket even to large ticket. We hope to see that improve in future, but at the moment it's pretty weak. There is also, whilst last few years have seen pickup in government capex, transition of that into private capex is something that is yet to happen at a high acceleration. We expect that as well to happen, and we're trying to position our portfolios accordingly. So that's the economic backdrop. Things like crude oil, things like gold prices, at a stock specific level, to the extent that they matter, are more short-term phenomenon. Beyond a point, beyond say 3 to 6 months, they don't have impact on margins. the competitive advantages of the company that you're buying would have impact. That's how we are thinking in terms of bottom-up portfolio construction. All in all, we're trying to pivot our portfolio towards companies which can allocate capital to benefit from the changes in the external environment. And India has gone through lots of changes where challenger companies, energized capital allocators, they are challenging incumbent dominant players, and we're trying to position our portfolios to benefit from those other structural trends.
So Rakshit, can you enumerate on these structural changes, either in the external environment or in the domestic market, the top 3 changes that would drive investment decisions over the medium term?
Yes, certainly. So think of it like this. In the last 3-4 years, superior physical and digital infrastructure has combined with things like GST, a structural drop in cost of capital as Indian families have shifted their savings from physical to financial. What that has done is it has kicked off 2 effects. One, smaller companies, they've started to push aggressively into the territories hitherto dominated by larger players. So for instance, in our portfolios, there's an Astral Poly as well, which is doing paints in a very niche way, right? Those are not trying to challenge the Asian paints of the world, but trying to create their niches in peripheral areas. That's the first outcome. The second outcome is well-managed, large-scale franchises have realized that it's time to spread their wings, enter into industries which can offer them a challenger opportunity and create a massive space in addition to their core business. So for instance, a trend from being a West Side and then into apparel in Zudio, getting into grocery retail of Star Bazaar in a big way we see going forward, Tube Investments from auto ancillaries, core business, highly cash generative, getting into the EV space in a very interesting and commercial EV orientation rather than the passenger vehicle EV, etc. So those are some of the examples. And accordingly, I think the change that we are seeing is previously greatness was defined, according to us, by companies doing more of the same in a better way, in a linear manner over a longer period of time. From there on, I think greatness in future will be defined by the core business doing more of the same in a better way, but a lot of non-core getting added as extra layers to the franchise. So maybe a little lower ROC from not 40%, maybe a 25-30%, as newer businesses have relatively lower ROC during the gestation period, but very high reinvestment rates. Those are the kinds of businesses, I think, which will power up greatness at a fundamental level.
Okay. Actually, I was going to just ask you that in the shorter term, will we see lower returns coming in from these businesses which are extending or which are diversifying into newer businesses or new energy businesses that some of them are doing? Are there some risks associated with this diversification that we are seeing, say Astral entering into a market which is already led by, bigger companies, or for instance, Tube Investments getting into the EV space? We have a lot of these companies talking about maybe green hydrogen as a big source, but we haven't seen any outcomes so far. Do you think markets are already pricing it in way earlier than the results that will be seen?
No, I don't think the markets are pricing it in, but the risks do exist, and perhaps that's the reason why the share prices are not skyrocketing on the announcements of such diversification attempts. So the risks, as you asked, the biggest risk is capital allocation in a peripheral area is going to have more risks than capital allocation only in the core. Right? Because in the core, if the company is dominant, it has created the right to win, which others cannot catch up with very quickly, then the capital allocation decision will instantly deliver results. But in a slightly, let's say, a non-core or a peripheral area, you need to find synergies. You need to find the reasons why you'll have a better right to win than anybody else who attempts to catch up as you try to be the challenger. So what you need is management teams which are incredibly focused, incredibly driven, very disciplined. That becomes a very big differentiator rather than just systems and processes. that might help you do more of the same. I think over a period of time, we are already seeing, and again, the names that you took, so Trent is an example. I mean, I don't think the market does not factor it in as the business progresses. It does factor it in, and we do expect to see that happen to many other companies in the portfolio that we've got.
That's a nice thought, Rakshit. The great businesses today are not just about doing your core business better in a bigger way, but also perhaps looking at expanding into niche areas where they can build on the brand, the distribution, and so many other strengths of the large conglomerates. Thank you very much for joining us today. This is a story that we'd like to highlight to our viewers, that JSW Infra could be looking to launch a QIP. This is what Vivek has picked up from his sources. He joins us for more. Vivek.
Well, that's right. Very interesting development that we are picking up from our sources as far as JSW Infra is concerned. We understand that the company is contemplating a significant fundraising plan, and we understand that the route that the company may choose to go for this particular fundraise could be via the QIP route. Like we mentioned, we understand that the company may look to raise a little over 5,000 crore in the first tranche of the fundraising. What is it that the company is looking to raise funds for? Sources indicate that there will be two key primary reasons for which the company is looking to go ahead and do a fundraise. Number one, remember, recently the company went ahead and announced significant capex plans of almost 2,350 crore to go ahead and raise capacity of some of its key ports. Along with that, also remember, JSW Infra is a recently listed company. The company continues to have promoter shareholding well in excess of 75%. So this particular equity dilution that will happen on account of the QIP will also help bring down the promoter shareholding. So that's another reason that the company is actually contemplating that could go ahead and make the company choose to go for the QIP route rather than any other mode of fundraise. We also understand that, remember, number one, the company has publicly said that they are looking to target capacity of close to 400 million tons per annum. The current capacity is close to 170 million tons per annum. Remember, SEBI's rules also indicate that the promoter stake is likely needs to be below 75% within 3 years of listing. At the end of Q1, the promoter stake stood at 85.6%. So there needs to be a significant amount of dilution that needs to happen in order for the promoter shareholding to meet the SEBI norms by the end of 3 years. Recently, there was a note by BNP Paribas as far as JSW Infra is concerned. They've also highlighted that one of the routes to go ahead and meet capex requirements could be the QIP route, and they actually believe that there could be close to 9,000 crore equity fundraise. And along with that, with this equity, the company will be able to go ahead and fund additional growth capex of close to 25 to 30,000 crore rupees. They believe the successful fundraise can go ahead and add almost 100 rupees per share if it goes through successfully, and the company can go ahead and demonstrate an ROC of 18% and up.
Okay, all right. Thank you so much for bringing us those important details, Vivek. So JSW Infra, that stock remains in focus. Time for a short break now. On the other side, we speak to Jagan Padmanabhan from CRISIL over the government's move to overall highway toll collection rules to understand that and what the impact could be.
Welcome back. Now, the government has notified major changes to the highway toll collection rules. Now, the new rules will allow users to pay based on the distance they cover with no toll charge for the first 20 kilometers. To understand this in greater details, we have with us Jagan Padmanabhan, Senior Director at CRISIL Market Intelligence and Analytics, joining in. Jagan, thank you very much for joining in. Share your initial thoughts on this. How will this play out? Will there be any impact on toll collections? Will there be an impact on road developer interest, for instance, going forward?
Yeah, so this is a great development to start with. We had from having a toll collection by collecting it across the counter, we moved to a FASTag, and now we're going to go to a global and navigation-based satellite system in which it is going to be completely online, right? And what was a toll collection through FASTag, which was there, which is an electronic way of collection, and there was a 42% jump, and close to 54,000 crores of toll collection has been through FASTags in 2024. And so the users are pretty much happy. And that is getting reflected in terms of the wait times at the toll plazas, which has come down to about close to 47 seconds, as said in the parliament by the ministry. Down, it was close to 10 minutes plus in 2014. So there's been a huge reduction, and the intention is to bring this down further so that it's a seamless interaction which happens at the toll plaza. The important aspect is the implementation aspects, which will come through and it has to be done probably in a staged manner. So the initial reactions is a great one, and some of the developed countries have already started to do this, and hence it is only in right spirit we also adopt such systems.
Okay, so there are a lot of questions that have come up as well, right? When you said that we moved to FASTag, that reduced the time at tolls, what does it do to FASTag now? Suppose if I'm going from place A to B, do I not use FASTag at all? Will it replace FASTag completely?
Not just as yet. Over a period of time, that could be happening. And they have called this out as well. While it is not yet completely clear of what will be the implementation roadmap, but the indication that has been given that it will be starting off with the first 2,000 kilometers to initially start with, and over a period of time go to about 50,000 kilometers in the next 2 years or so. Put it in context, we have close to about 150,000 kilometers, which is NHAI toll roads which are there. So it will be a hybrid mode. FASTags are not going away in any time soon. This will be done in a pilot manner, and if found successful, will get graduated towards about a 50,000 kilometers in the next 2 years or so.
So it will work in a hybrid fashion. FASTag and this GPSS will coexist together in a fairly seamless manner. But for toll collectors, say companies like IRB Infrastructure, is this going to be positive or is this going to be negative? Because one can say that with this satellite system, maybe the leakages get eradicated. We will be able to plug the leakages. So perhaps toll collection goes up on an aggregate basis. What should be the impact on, say, companies like IRB Infrastructure, according to you?
Yeah, I may not be in the best position to comment on a company specific, which is IRB, but I can.
No, I meant like toll collectors.
Understand. Yeah, I'll answer that. I'm just saying that, there are far many more toll collectors as well. It's quite positive for them, because at the end of the day, when the user experience is better, and that would mean having a seamless interaction at the toll plaza, there will be more users who would be adopting this. And the GNSS-based system is going to be applicable to the category M and N, which in layman's language would be for the passenger of the freight segment to start with, which is anyways the predominant toll-playing category. But from a developer perspective, they would welcome this. The cost of doing this would be far lower in compared to the FASTags. So over a period of time, the cost optimization will also happen for the developer. And the growth in traffic. So from a developer perspective, two things are the most critical ones. That is the traffic, which would be there. The second would be the cost of maintenance of the road. This determines the returns for the developer. And if the user experience is going to be far higher, then the traffic will eventually increase, and which would mean that will be positive returns for the developer. So I think the developers should welcome this kind of a move.
Okay, so it'll be, they will welcome this kind of a move. You said, of course, it's there globally. We've seen it in the US. We've seen it in other developed countries as well. This system where a global positioning system is used for toll charges. How much time saving does it do versus, say, a FASTag system that we have currently? And what differential in pricing will we see here? Yes, cost for developers could go down. Would it mean lower toll for users as well?
So to start off with, as I said, this will be a hybrid, so that the FASTag will continue to remain. So I'm not suggesting that there is going to be any differential pricing to start with, and I don't foresee that happening in the near future. That's point number one. The second is in terms of for the developer perspective, it is just a seamless part of it. So there is the idea is that there should not be any wait time at the toll. So what the claim is of 47 seconds should also significantly go down. That is the overall part of it. And also, I think Sonia kind of mentioned the leakage part of it. FASTag had significantly brought down the leakages in the system. This should further bring that down. And I think from a plugging of revenue leakage perspective, that will also bode well for the developers.
So this GNS system, Global Navigation Satellite System, is it like a device?
Yes.
Like how FASTag is a sticker that you stick on the card? So who makes these GNSS devices? Are you aware of any companies which make this, and how soon do you think this entire implementation will take?
Yeah, so I'm not aware of there are people, it's just that I'm not aware who is making this. That is the system, but there is going to be an onboard unit, OBU, that they are talking about, which will get fitted into the vehicles, which would then be used as it. So like a FASTag's equivalent would be an OBU, that's the onboard unit, which would be put onto the vehicles for them to track on it.
Okay, so there are a lot of execution, I would say, timelines that we have to watch out for this one. Of course, initially the take is that it is a positive move by the government. Execution, of course, remains key. Mr. Padmanabhan, thank you so much for joining us today and explaining to us what these changes could mean for the toll collectors and users as well, and what the outlook could be going forward. Thanks a lot for tuning in. Okay, with that, we'll get into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.
Well, the countdown to the U.S. election has begun, and Vice President Kamala Harris and former President Donald Trump met for the first time today for the ABC News presidential debate earlier this morning. This was one of the biggest showdowns in the history of U.S. elections, and both candidates presented conflicting narratives on the state of the economy, immigration, and the ongoing global wars. CNBC's Alice Brar gets us the takeaways from the debate.
And following the historic presidential debate, Kamala Harris has been receiving praises for being articulate on some of the burning issues in the U.S. One of the important reactions came from Taylor Swift, who endorsed Harris through an Instagram post. The Vice President's well-prepared debate was also appreciated by David Axelrod, who is a former White House official, and Tim Miller, an American political consultant and commentator. In fact, Elon Musk also acknowledged Kamala Harris, saying she exceeded many people's expectations. Okay, interesting times ahead for the US political landscape. So we'll keep tracking that for you. But for now, we'll wrap on trading hour. But stay tuned. Halftime report is up next with all the market action.